Besides the standard online stockbrokers, many micro-investment apps allow you to frequently set aside small contributions into a fund to earn a better long-term return than you would get from a savings account. In this video, let's compare 8 micro-investing apps in Australia to see which one fits you best, or is micro-investing worth exploring at all? My name's Irene, let's jump right in. First of all, what is micro-investing? Micro-investing is investing small sums into a portfolio of assets, usually through an app. And micro-investing provides some unique features, such as compared to the minimum contribution of usually $500 from a conventional share broker, you can invest as little as $1 using these micro-investing apps. And it's very quick and easy to get it going. You can set up your account in under half an hour, download the app, link your bank account, and be ready to invest. And most micro-investing apps allow you to set up automatic investing. And an app like Raise can even use your spare change from your transactions and make it available for you. Some apps can be linked to Sharesight, a portfolio management software for tracking transactions. The typical micro-investing app offers ready-made portfolios, so they are very beginner-friendly if you don't know what to invest. So those are the good points about micro-investing, but it also has many drawbacks, such as you have no control over what to invest due to the limited investing choices. The fund manager gets to decide what asset class, what percentage, what individual bonds, shares, ETFs in each portfolio that you may not agree with. And lastly, $2 to $3 monthly subscription may take a big percentage of your relatively small balance. And think about it, a $2 monthly fee times 12 months, $24 yearly fee is 1% of a balance of $2,400. That's really high. At the end of the day, there's no free lunch. And micro-investing platforms, they have to make profits from these fees. The micro-investing apps that we compare today are Raise, Spaceship Voyager, Concept Pocket, Sharesies, Bloom, Super Obvious, Pearler Micro, and Koala. Raise and Space Voyager are the first two pioneers, with Raise being the only platform that offers a spare change feature. Sharesies is the only platform that doesn't have a ready-made portfolio, so they charge a brokerage fee instead of an ongoing subscription fee. You can buy, sell, and auto-invest shares from the US, Australia, and New Zealand. And Bloom, Super Obvious, and Koala all offer a single active fund, and Bloom emphasizing climate impact, while the other two emphasizing ESG investing. So let's have a look at their investment options one by one. Starting from Raise. Raise is the one that has the most comprehensive options. It offers 5 standard portfolios based on different risk levels, 1 Emerald ESG option, 1 Sapphire option that includes a 5% weighting to Bitcoin, and 1 custom DIY option. Standard portfolios are made of 7 building blocks from Australian large cap, Asian large cap, European large cap, US large cap, Australian government bonds, Australian corporate bonds, and Australian money market fund. As the 5 portfolios go from conservative to aggressive, more assets are put into the equity. If you're fond of cryptocurrency, you can consider the Sapphire portfolio, which includes 5% Bitcoin. One thing that caught my eye is that although this is a high-risk portfolio, it still intentionally keeps defensive assets like bonds and money market funds in the portfolio. The DIY custom portfolio invites you to use 16 equity ETFs, 4 bond ETFs, Bitcoin, money market ETFs, commodity gold ETF, Raise property fund as the building blocks to build your own portfolio. Now, Spaceship Voyager. Spaceship Voyager offers free ready-made active managed equity portfolios. So Origin aims to invest in the top 100 Australian and top 100 international listed companies by market cap. And the Earth portfolio is the ESG option that invests in 30 to 50 Australian and global companies that have a positive impact on the world. And Universe portfolio is the high growth option that invests into 70 to 100 Australian global public companies that have the most growth potential. Now, Concept Pocket. Concept Pocket offers 7 equity ETFs from Aussie Top 200 to Aussie Dividends, from Global 100 to Emerging Markets, from Healthwise to sustainability leaders to tech savvy. Pearler has his Pearler Micro investing platforms, and Pearler offers 10 ETFs options spreading out to 4 categories. You can get all in one fund, or you can get the core broad market large cap ETFs. It also separates the Aussie and global large ESG companies into 2 options that you can individually invest in. Pearler Micro also offers 2 thematic ETFs. They are Battery Tech, ACDC, and Active Managed Fund, IMPQ. As Bloom, Super Obvious, and Koala all use one single equity fund that is actively managed. I'm not going into details on the holdings because picking the individual company is very much subjective to the fund manager's methodology and goals. So from the 4 platforms that offer ready-made portfolios, we can see only REITs and 1 portfolio of Perla Micro offer asset class diversified portfolios. Spaceship Voyager and most options of Perla Micro are equity funds, and REITs is the one that includes the most options of all. Not only has bond and money market ETF, it also has commodity, cryptocurrency, and property as well. In terms of active and passive funds, Spaceship Voyager are all actively handpicked companies, while the rest of the 3 platforms consist of both index funds and active managed funds. Now, let's have a glance of the minimum investment requirement. Bloom sets a higher bar of $500, and you need to invest at least $50 to Comset Pocket, and Koala $10, Raise $5, and ready-made portfolio platforms usually charge a monthly subscription fee for different tiers of balances. And Comset Pocket and Sharesies charge for brokerage fee per trade, and for an initial balance of 0 with a monthly contribution of $300 to reach 3,600 balance by the end of the year, for example, not considering fund returns. Here are the total fees for each option. At first sight, $42, $29.40 don't seem much, but if we convert them to the expense ratio, REITs standard portfolio $42 equals 1.16%. That's a lot. SEC did a research on how fees affect long-term portfolio returns. A 0.25% increment in fees will reduce the return by $10,000 for an initial $100,000 balance over 20 years. A 0.75% increase in fees will reduce the return by $30,000. If we take the cheapest chat-sponsored broker Stake, for example, I probably would invest the $3,600 into 3 lots instead of $300 monthly. So $3 flat fee times 3 times $9 is only equivalent to 0.25%. Even Perla with a slightly higher fee of $6.50 times 3 times would end up 0.54% as management fees. And CMC is even better at 0 brokerage for any transaction under 1,000, so no fees. The way how Sharesies fee is calculated is even more complex. On its website, it says you get charged 1.9% transaction fee on the amount invested up to a capped fee amount. So if you place a $100 buy order, the amount that will be invested, $98.14, is used to calculate the transaction fee amount, which is deducted from your order amount. Fee ended up to be 1.86% with a cap of $6 Aussie, which is even more expensive than Stake, and it's not chat sponsor shares. Speaking of chat sponsor shares, the only chat sponsor micro investing app is Comset Pocket, and all the other platforms use the custodian model. And Sharesies use one HIN for all investors is called Omnibus HIN. All the investors on Sharesies are the beneficial owners. I wouldn't worry too much about any of these platforms going under, which statistically still could be possible, but over the long term, they may change ownership or investment options that you may slowly lose interest on them and want to switch to other brokers. But you can't carry your portfolios. The only way to get out is to sell for cash and buy from the new broker. So, micro investing is really not designed for the long-term game, especially if you're an experienced investor. Like the higher fees that we just talked about earlier, you'll be disappointed by the lower net return dragged by it. And you may never achieve the diversification that you want due to the limited choices. However, if you are just a beginner, micro investing platforms can provide some level of investing education and making saving and investing more fun. But eventually, you may want to switch to conventional brokers. So which micro investing app do you use? Leave a comment and let me know. My name's Irene. I'll see you next week. Bye.